Very good afternoon, friends. The ITRs for assessment year 23-24 have been notified recently and much ahead of the beginning of the assessment year 23-24, which means the intention of the government is very clear that no extension of due dates would be provided, and as taxpayers and professionals we need to be updated and ready for filing of returns much before the due date. In this video, we will analyze the important changes. While there are many small changes, yet we will analyze 7 important changes in ITR 1 to ITR 6 for assessment year 23-24 as against the last ITRs. In the coming video, we would discuss the changes in ITR 7 which impact is the most. So let us start from ITR 1. We all know that ITR 1 is a simple income tax return which is to be filed in case you have income from salary, house property and certain income from other sources. However, even in case you have not crossed the threshold limit of taxability, even then under 7th proviso to section 139, you would have to file your income tax returns, and one of the conditions under the 7th proviso is that in case you have deposited more than 1 crore rupees in your current account, then it is mandatory to file your income tax return. However, ITR 1 cannot be filed if you have any income from PGBP, and therefore such condition for filing ITR 1 for maintaining a current account and depositing 1 crore in a current account, that has been done away with, and now you can file ITR in such case as ITR 3, 4, 5 or 6. The second important amendment is with respect to disclosure of whether in case you have income from PGBP and you have withdrawn from the new scheme back to the old scheme, then you would have to disclose this. And as you know that if you are withdrawing from the old scheme to the new scheme and then you withdraw again back, you can do it only once in a lifetime. So if you have utilized this option, it requires to be disclosed so that thereafter you cannot again opt out of the old scheme and opt in to the new scheme again. Next important amendment in ITR 3 is with respect to a disclosure in the balance sheet. For advances received, in case you have received any advance, you have to now bifurcate it between an advance received from a related party under 40A(2)(b) and other advances. However, mind that a corresponding amendment has not been made where you are making or giving advances to related party. So the government wants to track whether there are any old advances which have been received from related party which is standing for a long period of time, and it wants to ascertain whether or not such advances have to be added to your income in a certain year or not, when it is from a related party and standing for a lot of time. Next amendment in ITR 2 and ITR 3 is with respect to the earlier notified section 89A. As we know, in case a non-resident returns to India and he has certain accounts including say retirement or social security account in a foreign country, then the income has to be taxed in India on an accrual basis. But in case the income is taxed in that foreign country on receipt basis and the benefit of DTAA would be applicable only on receipt basis, then there is a mismatch and an advancement of tax in India. To take care of this hardship, the government introduced Section 89A, read with Rule 21 AAA, wherein the taxability in India on such accounts accumulation would be on receipt basis in the year in which it is taxed in the foreign country itself. Previously in the ITRs there were only two line items where you used to disclose this benefit taken under 89A, either from a notified country like US, UK, etc., or from a non-notified country. However, now there is a new line item where a new disclosure is required whether you have earlier taken a benefit of 89A, so as to track that if you have earlier taken a benefit of 89A, then in future in some year on receipt basis you have to offer the income for taxation. Next, fifth and most major amendment I would say is to introduce Schedule VDA in ITR 2, 3, 5 and 6. This VDA schedule is for disclosure of earnings from virtual digital asset. As we all know, in the last budget, virtual digital asset taxation, popularly called crypto tax, was introduced, wherein in case there was a transfer of virtual digital asset, then such income of excess of receipt over cost of acquisition only would be taxed at the rate of 30% special rate under section 115 BBH. However, there was a confusion in many circles that whether in case, say for example, you enter into 10 transactions of VDA and in 5 you incur a loss and in 5 you incur a profit, whether the loss in 5 transactions could be set off against the profit of 5 other transactions. It was always clarified by the CBDT and now it has been inculcated in column 7 of Schedule VDA, wherein in case you incur a loss on certain transaction of VDA, that loss has to be treated as nil income, and so the loss cannot be set off against the profit in certain other transactions of VDA. So the gross profit without netting it off with loss has to be taxed under business income or capital gain income. Whatever be the income, it will be taxed at 30% special rate itself. So corresponding amendments in schedule of capital gain, business income as well as SI special rate schedules have been incorporated in ITR 2, 3, 5 and 6. Capital gain schedule, that sees a change, and now you have to disclose the accrual of capital gains quarterly. So you have to show as to when you have received a gain in the form of short term or long term capital gain, quarter 1, quarter 2, quarter 3 or quarter 4. This would help the government in tracking whether interest is payable under section 234C or 234B for that matter. So now your advance tax calculation, which you will be doing on 15th of March, that has to also take into account the capital gain which accrues quarterly, right? Next important and the last major amendment is in ITR 3, 5 and 6 in the profit and loss account in PGBP. Separate disclosures for intraday trading of securities which would be considered as speculative income are required. On your screen you can see there are two disclosures which are required. First is the turnover of this intraday trading income. What is turnover? It is the gross of losses as well as gains in trading, intraday trading, and the profit is the net. So you have to disclose the turnover of intraday trading as well as the profit, and the profit would be taxable under business gains, right? So friends, these are the 7 important amendments in the ITR 1 to ITR 6 for assessment year 23-24. We need to have the data points ready on 1st April when we start preparation for the ITRs, and therefore we should get ready for filing these ITRs from now. We will soon come out with the video on changes in ITR 7. So please stay tuned. Do like, share and subscribe to this channel and share this video for maximum dissemination of knowledge. Thank you very much.